Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Bayajan, currency analyst, and today is Monday, October the 23rd. Today we will look at the dollar yen, the euro dollar, the pound dollar, and the dollar loonie pairs. Let's begin first with dollar yen. We can see there is some strong upside resistance. The RSI is heading upwards and is fast approaching the 70 overbought level. It hasn't quite reached overbought territory, so there is room for some further gains until it does so. The next major resistance should come at 114.49. We already saw on Friday prices broke above the 78.6% Fibonacci retracement of the down leg from 114.49 to 107.31. A break above 114.49 should set the USDJPY towards the previous peaks. We've got the March peak of 115.50, then followed by the December 2016 high of 118.66. That's a very important resistance level because it's also near the 161.8% Fibonacci retracement of this down leg from 114.49 to 107.31. In the medium term, the picture is also turning rather bullish. The MACD has crossed back above its red signal line. We're also seeing prices above all the moving averages, but in the event of a downside reversal, we should see support coming at the 78.6% Fibonacci at just below 113, followed by the 61.8% Fibonacci at 111.75. That's also important because it's also where the 200-day moving average is currently converging, and below that we have the 50% retracement at 110.90. Moving on to euro dollar now, we can see euro dollar is looking rather bearish in the short term. We can see RSI is trending downwards and is below the 50 neutral level. We are seeing the possible formation of a head and shoulders. We had seen something that did resemble a double top previously, but that didn't really, although that did signal a trend reversal. Now that more time has passed, we can see that it is in fact looking more like a head and shoulders, with the shoulders at around 1.1885 and the neckline possibly at around 1.1660 to 1.1670. So if we do see prices break below that neckline region, we could possibly see a reversal to a downtrend. The next major support should come at 1.1385. The medium-term picture, it is looking much more neutral. Prices have been consolidating since reaching that September 2.5-year high of 1.2092, and prices are currently trading below the 50-day moving average, although we can see that 200-day moving average is still trending upwards and well below price action, signaling the longer-term uptrend remains intact. But in the medium term, it's going to depend very much whether or not prices will break below that neckline. To the upside, we should see possible resistance coming at the 50% Fibonacci retracement of the down leg from 1.2092 to 1.1669 at around the 1.1880 level. That also acted resistance previously. And then above that, we should see possible resistance at around 1.1930 and 1.20 before prices were to once again challenge the 1.2092 top. Moving now to the pound dollar, the upside momentum in the medium term at least has weakened. It is looking the bullish structure is at risk in the medium term because we saw prices forming a lower top. Up until then we had seen higher highs and higher lows, but now the prices we saw finding resistance at the 50% Fibonacci retracement of the down leg from 1.3656 to 1.3026, and then they reversed lower after reaching the 50% retracement at around 1.3340, 1.3337 to be exact. At the moment, they're just at the 50-day moving average, so it is looking much more neutral than bullish in the medium term, and in the short term it is also looking very neutral, and the risk is to the downside. If prices break below 1.3026, that could potentially signal a trend reversal, or definitely or at the very least consolidation in your medium term, and then the next support should come at around 1.283050, 1.2835, which is just above the 200-day moving average. But we could possibly also see an upside reversal. The bearish bias is not too strong at the moment, so once again the 1.3340 area should be a major resistance to the upside, followed by 1.3520 before prices were to challenge the 1.3656 September peak, which was a 15 months high. And finally, let's look at USDCAD, dollar loonie. It has seen dollar loonie has seen its fortunes reverse dramatically. It's looking very bullish, in fact, in the short term. Also in the medium term, it is starting to look a little bit bullish as well, although for sure the longer term downtrend is very much intact for dollar loonie. But in the short term, of course, we saw prices break above the 61.8% Fibonacci retracement of the down leg from 1.2777 to 1.2060. There is resistance coming though at the 78.6% Fibonacci at around 1.2640. But if we do see prices break above 1.2777, that could potentially signal a reversal of the longer term downtrend. We should see then the 200-day moving average acting as resistance at 1.30 handle, followed by the 161.8 Fibonacci at 1.3220. But if we do see this upside momentum, we can see the RSI has appeared to have flatlined at the moment just below the overbought levels. The MACD, it has crossed just above the red signal line, but it's still only just positive. So if prices were to reverse to the downside, we could potentially see support coming at first at 1.25 handle, which is the 61.8% Fibonacci, followed by the 1.2420 area, which is at 50% Fibonacci, and is also where the 50-day moving average is currently standing at. And then below that, we should see potential support at 38.2 and 23.6 below until prices were to once again set new lows. The 1.2060 level is obviously a critical bottom, which was a 2-year low. So a drop below that would potentially signal a resumption of the longer term downtrend. That's it from me. Thank you very much for watching, and have a great day.